How to instantly improve your business's cash flow. What if I told you your business might be sitting on hidden cash flow right now, and that with a few simple tweaks, you could double your cash flow in the next 90 days without landing a single new customer? This isn't magic, it's smart financial strategy, and I'm going to show you exactly how. Why cash flow matters. You've probably heard this before. Revenue is vanity, profit is sanity, but cash is king. And here's the kicker. According to Scaling Up, cash flow is one of the 4 critical decisions every growth company must master. Businesses don't fail because they aren't profitable on paper. They fail because they run out of cash. Cash is a lagging indicator of decision quality. In the books, Data from the EOS library and in Scaling Up by Vern Harnish, they discuss a truth most businesses ignore. Cash flow is the ultimate scoreboard for your decision quality. Poor inventory decisions, bad pricing, sloppy collections, you'll see it in your cash. Great operational discipline, you'll see that too. Cash is how reality gets revealed. So let's talk about how to shape that reality. Step 1, master the power of the cash conversion cycle. In Scaling Up, Vern Harnish urges businesses to track one metric religiously, your cash conversion cycle, or CCC. How fast does a dollar invested in a product, marketing, or payroll come back to you as cash? Shortening this cycle even by a few days can dramatically improve your cash flow. We'll hit this from both sides, collections, aka your inflows, and payments, otherwise known as outflows, in the next steps. Step 2, fix your terms. Start with collections. Are you net 30 or net 15? Why? Could you offer incentives for early pay? Scaling Up suggests moving to prepayment models wherever possible. Take deposits, do milestone billing, automate your invoicing, and proactively ask your clients about their level of satisfaction. Let me ask you this. Why do you think Costco offers low prices on their goods but charges a membership fee? Why do you think every software company is going to a subscription model rather than just charging you a one-time licensing fee? Why do you think Amazon provides a subscribe and save feature? Why do most attorneys charge a retainer before starting to provide services? And here's another one. Why do you think gyms love locking you into annual memberships even if you plan to go month to month? In all these cases, it's about pulling cash forward, and your business can do the same. Step 3, stop being the bank. You are not a bank. You shouldn't be financing your customers' operations. Here's what we teach. Get paid up front when you can. For larger projects, use progress payments tied to deliverables. And here's a mindset shift from Scaling Up. Always move your business towards the goal of your customers financing your operations, not the other way around. Step 4, cut non-essential spend. Alex Hormozi, cut the fat, keep the muscle. Alex Hormozi says it perfectly. Most businesses are financially overweight. Subscriptions, extra licenses, perks. Look through your subscriptions. Software is notorious for this. Determine if there's a way to consolidate your tech stack. Check this on an annual basis and tie this back to your cash conversion cycle and to your value chain. Do you really need those tools? Are you actually utilizing those tools in the most effective way to get the most out of them and ultimately create cash for the business? In Scaling Up, Harnish recommends a zero-based budgeting exercise quarterly. Would you rebuy that expense today? If not, cut it. Renegotiate everything. Every dollar saved is cash in your bank. Scaling Up suggests setting a goal to renegotiate your top 5 vendor relationships once per year. I've seen clients get 5 to 15% savings just by asking. Remember, it's easier to negotiate when times are good. Don't wait until cash is tight. Step 6, use the power of float. Use timing to your advantage. In Scaling Up, the rule is simple. Collect as fast as possible, pay as late as ethically and legally possible. Use credit cards to buy yourself an extra 30 days of float. Pay suppliers on their actual due date and not earlier, unless of course they're going to give you a discount to do so. Step 7, improve data visibility. In the EOS book, Data, they talk about scorecards, 5 to 15 weekly numbers that drive accountability. Most, if not all of your KPIs should correlate to cash flow. Here's the thing, most businesses aren't tracking the right KPIs. Anytime you see a dip in cash flow or an unexpected increase in cash flow, you should go trace that down and figure out why it happened. Search along your value chain, determine what caused or contributed to that shift in cash flow. Then think about adding a KPI that acts as a proxy for that event, and assign one person to watch that number like a hawk. This is how you generate effective leading indicators that will tell you in advance whether or not you're about to hit a cash crunch. Your leading indicators serve as an early warning system. Bonus tip, increase pricing without losing customers. Now here's an even bigger mind shift from Alex Hormozi. If you look at your profit and loss statement, there's actually an unwritten number that sits above revenue, and that's the value you provide. As long as there's a wide enough spread between the value you're providing and the price you're charging, raising prices is justified. Yes, some customers might leave, but your gross revenue is likely to rise because your price per transaction goes up. And here's another bonus. You'll have more cash to play with, which lets you invest in attracting higher quality, higher paying customers who see and appreciate that value. We see this all the time. A 5 to 10% price bump done properly rarely loses customers, but it can massively improve your margins and cash. Need help fixing your cash flow? Let's talk. Cash flow doesn't fix itself, but it can be fixed fast with the right strategy. If this resonated with you and you're ready to take control, let's talk. At TMV, we help business owners master their numbers and create financial freedom. To learn more or book a call, visit us at www.tnvllp.com/accounting. That's www.tnvllp.com/accounting. See you next time.